Everyone who invests has probably heard of BlackRock, but which companies does BlackRock have the most of in its portfolio? And this question, folks, is a very interesting one because BlackRock is the largest investment fund in the world, and being one of the biggest investment funds globally, considering that they manage trillions of dollars, we're looking at a company that has a significant influence on market prices. Their ETFs are very powerful. What BlackRock does, others copy. And the truth is that this weight, this influence makes it normal for us to talk about BlackRock. But what does BlackRock own the most of? What is their top 10? That's what I'm going to analyze here today, folks. I'm going to analyze why those companies are in the top. What does this tell us? What does this give us? And how much can we manage our portfolio based on this information? As you already know, I'm not financial advice. The QR code for my Discord is here, and the link is down below so you can join. In my premium Discord, by paying, you get access to daily analyses. You also get access to my portfolio. What I buy, what I sell, you can talk to me, all those things. And of course, if you like this content, subscribe to the channel. It's mainly here on YouTube where I make most of my content, where I do my analysis. So let's get started. BlackRock. First, it's important to explain what BlackRock does most of the time, so to speak. BlackRock manages investors' money. That's basically it. So, the simplest way to explain it, and obviously this is a bit of an oversimplification, is to say, I'm an investor, I have a lot of money, but I don't know how to invest, I don't want to waste time, I want a professional to handle this for me. So there are several things I can do. I can go to BlackRock and put my money there, and BlackRock will manage my money in a personalized way. This is if I have a lot of money. And then I'll have specific people within BlackRock who will be buying and selling with my money to give me the highest possible profit, and they take a commission from that profit. There's another way, the most well-known and common for people like us who don't have millions, which is we buy BlackRock's ETFs. And you, if you invest, have probably already seen ETFs that start with iShares. Those are BlackRock's. How does this work? I put money into that ETF. The percentage of companies in that ETF is managed by BlackRock, and BlackRock may or may not follow an index. Let's suppose that if it's the S&P 500, BlackRock obviously has to follow that index with slight adjustments. So it doesn't have to be exactly the same, down to the hundredths of a percent. No, BlackRock can change it slightly as long as it stays reasonably close. Let's suppose Nvidia has 6.37%, let's say, in the S&P 500 index, but maybe BlackRock thinks Nvidia is going to go up even more. So instead of having 6.27 or 6.37% or whatever it is, they add another 1 or 2 tenths of a percent. It still stays pretty close, but it's a bet, so to speak, by BlackRock that Nvidia will keep growing, that it will be good for investors, and so the percentages are always managed by BlackRock. Then there are all the other ETFs that aren't tied to an index, unlike the S&P 500 or the Nasdaq, which are indices that are widely copied. Then there are those ETFs, like the Artificial Intelligence ETF, where BlackRock manages it however they want, based on trying to get the highest possible profit every year, every month, whatever it may be. In these, they mix well-known companies that provide stability with other companies that are startups, and it's those startups that can really drive the ETF forward. And suddenly I bought an Artificial Intelligence ETF. Let's suppose I don't know anything about the subject. BlackRock is managing it for me and for thousands of other people who also bought that ETF, and suddenly profit is generated. Of course, at no point is profit guaranteed, but when we're dealing with ETFs managed by the big companies, by the major funds, there's a different level of trust. Even because, let's suppose you don't want to waste time with that, but you want the comfort of knowing your money is in good hands, so to speak, and all funds can fail. BlackRock is really, really big. It's the biggest of them all. That doesn't mean it can't fail, but to get where it is, it must have gotten it right a lot more times. So notice, when we analyze what BlackRock has in its portfolio, considering that BlackRock is in all types of markets and concepts, it's in all kinds of businesses, it has all kinds of ETFs, it's completely spread out. If we see that BlackRock has this company, and this one, and this one, and this one in its top holdings, it probably means two things. First, that outside of ETFs, so outside of the world I can invest in through BlackRock, these companies themselves are also growing a lot. On the other hand, it also means that beyond the ETFs that BlackRock has, which follow certain indexes and therefore also follow the market trend outside of BlackRock, where things also go up and down. And here BlackRock is more or less mirroring that. But then there are many other ETFs that aren't meant to mirror anything. It's simply BlackRock's own management. It's an analysis done by BlackRock saying, this company will appreciate more than that one. I'm going to take this one out of the ETF and put this one in. So if I take this one out of the ETF, I'm going to sell. If I put this one in the ETF, I'm going to buy. So when you look at the top 10 companies of BlackRock, you're seeing not only what the market outside of BlackRock is buying, but also what is then mirrored in BlackRock's ETFs, which are in some way a reflection of the index, but also everything else, which is simply BlackRock's own analysis. So in reality, here you have a very comprehensive picture of what the market is seeing, what the market is paying attention to, and what might actually make sense to invest in. So let's look here at BlackRock's top 10. 10th place, JP Morgan. Makes sense, JP. Morgan is far ahead of the competition from the standpoint of financial influence and institutional weight. JP Morgan really is the big bank right now. It's the one that came out best from the 2008 crisis. It was the one that kept growing, kept acquiring, and has management and vision that are far ahead for a sector that is usually very conservative. Then, notice this. From here on, look at this trend. 9th place, Google Alphabet. 8th place, Tesla. 7th, again Alphabet. Don't forget that there are two different stocks for the same company that you can buy. With one, you have voting rights. With the other, you don't. But it's all still Google. 6th place, Broadcom. 5th, Meta. 4th, Amazon. 3rd, Apple. 2nd, Microsoft. 1st, Nvidia. So in reality, folks, what do we have here? In the top 10, we have 1 bank and 9 tech companies. Actually, it's 8 tech companies because Google appears here twice. And this in reality means 2 things to me. First, the world of investors is clearly focused on technology, and we already knew that because we see the percentages that the top 10 have in the S&P 500, and we can see how the Nasdaq is doing. And there's a lot of money flowing into tech companies, and in the midst of it all, there's a bank that really manages to set itself apart from the other banks. So there you have it. We have both the retail world, individual investors, and also other investment funds. So everything outside of BlackRock is looking at this. BlackRock itself is looking at this too. Because if BlackRock had to mirror the S&P 500, it would have to buy a lot of these companies. But all the other more thematic ETFs, so to speak, where BlackRock doesn't have to mirror anything. BlackRock simply analyzes, chooses, buys and sells the companies it wants as it pleases, according to the concept of that ETF. If BlackRock thought that none of these companies were worth it, maybe other companies would show up in the top 10 here. But the difference, folks, is huge. More than the companies themselves, what's important is realizing that the largest investment fund in the world, which manages trillions of dollars, trillions in its top 10, 9 stocks are tech companies. And only after that do other major companies that help the world function start to appear, like MasterCard, Visa, Netflix, Johnson & Johnson, Oracle, which is around number 20. All of these are also companies that help the world run. Take a good look at these charts here. This is a chart you already know. It's the iShares Core S&P 500, the IVV, probably the most well-known or one of the most well-known ETFs from BlackRock. And you've already seen these charts here on the channel and probably elsewhere too. Here, we're talking about an ETF that tracks the core S&P 500. 20 years ago, it was at 122. Now it's at 671 all-time highs. In between the 2008 crisis here, when it went from 150 to 68, less than half, the rise, the very sharp COVID drop in just a few days, then back up, the interest rate and inflation crisis, up again, the tariff drop, and up again. More than 450% in 20 years. On top of that, along the way, dividends, as you can see, and growing. But this is a BlackRock ETF that tracks an index. But if we go, for example, to one, and I picked a very recent one, still not very well known. Take a look. We're talking about a BlackRock ETF focused on innovation and artificial intelligence. It's the BAI. Performance over the last 6 months, 61%, folks. That's impressive. 61%. So, roughly from the tariff crisis until now, 61%. 40 in a year, considering that it still dropped quite a bit. And if we go to this BlackRock ETF's website, what do you see? You see a lot of companies you know, but then you also see others that you might never have heard of. People who are outside the field don't know what Snowflake is, don't know what Celestica is, don't know what Fabrinet is, and many others here related to cloud, energy storage, semiconductors, software, and they're all here in these ETFs that BlackRock, without following any specific index, keeps buying. It buys these companies, but its top 10 are still the ones I showed you. It's still technology. As I've shown here many times, this is the Forecaster app. It's an app that I have. I pay an annual subscription because with this app I have all the information I need to make my decisions. Whether to buy, to sell, where the trend is, news. I can talk to the artificial intelligence to find out who the competitors of a company are, which politicians are buying and selling a certain company or ETF, what the trends are at this time of year. All of this is available here on Forecaster. I'll leave the link down below so you can sign up, simply because I think it's an app that's worth at least trying out, even if it's just for a month. And you'll probably end up much better informed with this app. This video, folks, is to show you that I'm a bit biased because I work with technology. I've been working with artificial intelligence for 20 years. It's the field I understand. Technology and programming is the area I excel in, so that's where I invest. My channel is obviously very focused on these tech companies, on technological trends, on politics, trying to get a grip on technology, on how much technology influences politics, and on how we, as a society, whether in our free time, social life, or at work, are influenced by this technology and how the money flows there. My channel is very focused on this, and in this regard things have been going well, because both my channel and my portfolio are centered on these companies. But this is also a way for me to show you that besides the S&P 500 now having almost 30% of its value in the top 10, and that top 10 is almost all technology, the Nasdaq continues to hit all-time highs. We have the Magnificent Seven with massive gains. Essentially, there is tremendous potential in those Magnificent Seven and others. Whether they will drop or not, they might drop, guys. Nothing is guaranteed, but the trend is there, the indicators are there for the long term. Statistically, this could go much better than worse. But then, when you look at the largest fund in the world, maybe one of the 3 most powerful companies in the world, and you see that the top 10 are technology companies with a bank in the mix, then we can really understand how the world works and how it will work in the coming years. Guys, I hope I was able to help with this very short video. This was really just to show you this. It wasn't even worth going through and showing each one and analyzing them. No, you know what these companies are. You know the potential of these companies. If you follow my channel, I've been talking about all these companies over the past few years, and all of them, fortunately, have been increasing in price. I hope I helped. Big hug. See you next time.